your estate to real estate. It's Money Matters with Dino.
There's very few people out there that can actually go as far as, knowing what the tax laws are and the things that can really save them money. They just think that I can buy and sell my own stocks. And wow, how much money you're leaving on the table, or whatever the situation be, because you're not thinking far enough ahead with the tax law.
You're not thinking of the future. And I think too, a lot of people don't manage their emotions well when it comes to the markets. They don't really want to sell that IBM or that Google because they've had it forever, when maybe they should be selling it, or it's too big of a piece of their portfolio. That's another danger that happens a lot, is that you've got a company that was bought and the stock has just shot way up. And when you look at their overall portfolio, it's 60% of their entire net worth. Well, you don't want to own one stock. I don't care what stock it is. You don't want to own one stock, because if that thing crumbles, lawsuit happens, anything happens, you've lost a huge net worth. You got to spread that out. And that's another area too, where I think a good advisor will sit down and say, how can we do this? And if it's in a retirement plan, this is probably a good thing for your listeners. If you have a giant position of one stock in your retirement plan, like a company-owned stock, you don't want to sell that if you're getting close to retirement, because there's some things you can do, and I always say don't try this at home, but there's some things you can do to make that not be ordinary income tax. Your retirement could be capital gains tax, but it's way too complicated to get over on the air.